Good morning and welcome to the Big Buzz Breakfast Club. I'm Melissa Legowski, founder, owner, and queen bee at Big Buzz Idea Group, and we are really excited to speak with our representatives from BMO Harris Bank this morning on financial management for nonprofit growth in uncertain times. Coming out of the pandemic and now moving into recession, we know that not enough nonprofit organizations are often trained on financial management. And we are really excited that these ladies from BMO Harris Bank are joining us today to help us all learn a little bit and find more resources and just really be able to get the information we need to make better decisions for growth for our nonprofits and associations. So today's session is being recorded, and we will be sharing the recording with you following the presentation. Please do continue to put any questions in the chat today or in the Q&A. We will be trying to answer all questions at the end. The way the presentation goes, we know that many of the questions may be asked as we continue through the presentation, but we will have time for Q&A at the end, and we encourage you to submit your questions throughout the presentation so we can revisit them at the end and make sure that you have all the information you need. Also, in an effort to make our presentations more available, the closed captioning option is available. So please do utilize that as you desire. You can turn it on or off at the bottom of your screen if you would like to turn it on or disable it. For those of you who may not know about Big Buzz Idea Group, we know here that many nonprofit executives lack the time, staff, skills, and funding that they need to succeed. Big Buzz Idea Group fills gaps in management, marketing, and event services so that you can focus on the big picture and position your organization to thrive. As a former executive director myself, I was a staff of one managing a ridiculous amount of work. And when I left that position, I just knew that nonprofit organizations needed a partner they could rely on for different needs. So Big Buzz Idea Group continues to grow. We now have a team of 14 people, many behind the scenes today. Thank you guys for all you're doing. And we really want to continue to plug in and be part of your team to help you succeed. And that is why we do the Big Buzz Breakfast Club on the second Thursday of every month. We like to continue to bring you information that we believe will help you run your organization like a business and continue to achieve great success. Today, I'm very excited that we have this panel from BMO Harris Bank. With us this morning are Vachon Harper-Young, Denisse Pachuca, and Letticia Flores Poole. Without further ado, I would love to turn the screen over to them and let them take it away.
Good morning, all. We'll get started momentarily as Vachon brings up our presentation, and she will kick us off.
It sure helps if I take myself off mute, right? Are you able to see the presentation now?
Yes.
Okay, great. So thank you, Melissa and the Big Buzz Group for this opportunity to present to you today. I'm Vachon Harper-Young, and joining me today again is Letty Poole and Denisse Pachuca, who will provide a little bit of a brief introduction as they present portions of the content today. Ron Millsap is our director of programs for industry verticals. He will not be with us today, but he provides leadership for our industry team that focuses on specific groups and or industries. So a little bit about me. I've been with BMO Harris Bank a little over 20 or close to 20 years in various roles, specifically in business banking. And I had the opportunity to launch the BMO for Black and Latinx program about 2 years ago. And the program focuses on for-profit small businesses and consists of access to capital, access to education, networking opportunities, and partnering with organizations. Since the initial launch, we've expanded the program to women-owned business and Native-owned businesses. So we're very proud of the advances that we've made with the program thus far. So I will try to navigate this presentation and move forward. This next slide here is a comment from the Barlow Research Associates that says 45% of membership organizations said that they go to their accountant or bookkeeper for cash flow advice, while 19% turn to their banker, 4% turn to a colleague or industry partner, and 38% do not seek advice. So good for the 62% of those organizations that seek advice. Managing cash flow can be a challenge, and without a plan and cash flow management tools that are available, it can be difficult to manage expectations. The state of charitable giving trends 2016 through 2020 is what I have up here on the screen now. So in the USA, total giving rose 2.7% in 2016, 5.2% in 2017, and 0.7% in 2018, increased to 4.2% in 2019, and further increased to 5.1% in 2020 total of overall giving. This particular mix shows donations by individuals, donations by foundations, and giving by corporations. And I won't go into all the details of this beautiful little colorful chart, but we know that contributions are impacted primarily through economic times and how you manage that situation. So technology improves efficiency. So we realize that technology can greatly improve operations and attract younger demographics, civic and social organizations, and they're adopting digital tools such as mobile applications and internet programs. Social networking and message boards have made communication easier, and websites provide information for new and existing members. Mobile applications help groups reach young adults who consume most of their information on the go. Membership in older, established civic groups that have been resistant to technology has suffered. In some cases, members continue to rely on phone calls and handwritten letters. Declining membership forces mergers. So some large civic organizations have taken to merging neighboring chapters to avoid having to shut down operations within a weak market. While a merger can create stability within a local chapter, overall membership sometimes decreases as a result. The newly merged organization typically has greater capabilities and cash flow than either organization original chapter individually. Realignment can also pair weaker chapters with stronger chapters to improve the performance of the weaker chapter. So I'm going to turn it over to Letty, who's going to talk about why nonprofits may not succeed or why they do succeed. Letty?
Thank you, Vachon, sharing such great information. Again, Letty Flores, Poole, been with BMO 6 years, been in banking 25. Majority of my career also has been in business banking, working in communities, helping scale, grow, and really educate. So extremely happy and proud to be with you guys today to share some education. So what I'll share today on this slide is why do they fail? Why do they succeed? So when we think of a fail, typically no plan was established, right? And we're really big proponents of developing that business plan for your organization, having unrealistic expectations. And that's part of the plan, right? What are the expectations for the organization and or poor leadership? Let's focus on now, why do they succeed? So we have 6 to 7 different items here that I always wanted to go into a little bit of detail. They are agile. Now, when we think of the term agile, this term was actually created for some project management principles that were created by some software developers back in 1990. But this term has actually been broadly used and specifically around our nonprofits. These methodologies focus on frequent inspection and adaptation of strategies and activities, usually every 2 weeks. They also include a leadership philosophy that encourages teamwork and clearly defined short-term specific tasks. Agile nonprofits focus on developing results in a self-management team. In those teams, the hierarchy is not present as it is in traditional models of management. There's a big focus on transparency and an emphasis on frequent, short conversations. Immediate feedback is preferred versus long meetings, right? The second one is they are focused on their mission. So they have a mission always approach. So when we think of a mission always approach, every nonprofit should really have that mission, and that mission should be shared broadly and should align with the vision. So I know that's when you look at your branding of how you want to brand your organization, having a strong mission statement and a vision, and making sure that you share that mission statement. Your mission creates your culture. We know that some successful nonprofits, they are donor-centric. So when we think of what does that mean by donor-centric, knowing that your donors are your community. We don't want to look at our donors just as a cash transaction. We want our donors to have constant communication from us. We want our donors to know how they contribute, and they're really helping make a difference. Not just within the organization, but how does it make a difference within the world, right? Going back to that mission statement. They develop diverse funding sources. So, we know that nonprofits have to really be creative and have multiple sources of funding, online and offline. To name a few: grants, corporate sponsorships, membership, in-kind donations, selling goods and services. And again, never really just focusing on one type of funding source. So when we think of they are mobile, they are able to mobilize and inspire others. So how are they mobile? Meaning that they make sure that they are out in the community, right? Successful nonprofits are able to mobilize and inspire their staff and their volunteers and their donors. They consistently create meaningful ways to engage their individuals and connect them to their nonprofit's mission and core values. They build and sustain strong community. So again, it's that community, that communication. They are digitally savvy, right? And we know that that's extremely important in today's world, to make sure that you have multiple outlets to ensure that you are reaching everybody where they're at. And they continuously listen and improve. So how do you seek feedback from your community? How do you seek feedback from your donors? How do you seek feedback from your staff and or volunteers, and apply it to possibly a plan and an action? Next slide. So we're going to get into now some of the financial pieces. Denisse will definitely take a deeper dive. I just wanted to begin to touch on what we call budget and cash flow. So as a business, which a nonprofit, you have to have a budget. And we always talk about how these budgets should be reviewed and determined. So determine your time frame. Is that a weekly review? Is it a monthly review? Is it a quarterly and annual? Typically, we definitely suggest monthly review of your budget and cash flow because they go hand in hand. Sometimes allowing it to go to an annual may create some stopgaps that maybe you were not aware of. And there may have been some things that maybe needed to have been pivoted and adjusted that now we've waited too long. So our suggestion is monthly, but ensuring that you first establish that time frame. Estimate a total income over the period. So break it down by the source and the payment type. So based on your donors, based on the type of funding sources you have that outlined. And then addition to that outline, ensure that you know when those payments come in. Is it a monthly from particular corporate sponsorships? That may be an annual, right? So knowing when those align with certain projects and projections that that your nonprofit may have. Estimate total expenses over the period. So also break that down by the source and timing. So when certain projects are going to occur. How much is that going to cost? When is that happening? And how does that align to the source and the payment type? So again, having that really strong budget and understanding truly your cash flow and how the ins and outs is going to affect. And then, of course, we need you to subtract your total expenses from your total income. And that's really when we create that cash flow and understand, even though it's a nonprofit, is a nonprofit making dollars, right? So determine your surplus or deficit over that time frame. Again, that's why it's really important to make sure that you have certain time frames put in as far as when you're inspecting your budget and your cash flow. I'm now going to turn it to Denisse, where she's going to take a deeper dive into some of the financials.
Thank you, Letty. Um, Thank you, everyone, for having us join today. My name again, Denisse Pachuca. I've been with BMO Harris Bank about 9.5 years. Um, Overall banking, about 18. My direct, or what I've done at BMO, I've been a branch manager, but my most recent role before joining the vertical team was a business banker, which meant I worked a lot with both for-profit businesses and nonprofits like yourself. Now, I'd like to discuss a little bit uh, what it is that banks look for. We understand that nonprofits are completely structured differently, and the requirements are also different from a business that is for profit. And what I mean by that is, depending on the size of the organization, sometimes they don't even have to do taxes. So just the way that items are being tracked. Sometimes you have a CPA that assists. Sometimes it's just a treasurer who has CPA background. Other times it's just a volunteer. So it just depends on the size of the organization. And based on those requirements, when you're going into a bank to request any type of lending, the documentation that we request is a little different. So some organizations, depending on the size of the donations and the revenues that they are bringing in, are required to file Form 990s. And this is where you report, pretty much the taxes. A lot of organizations do this quarterly, but again, it depends on the size. When we're coming for any type of lending, if an organization does file the forms 990, we'd like to see those. If not, then other times there's audited financials. There's different type of audits. It just depends on what is required by your organization and the board members. Sometimes when those are not the case, meaning that those are not available because that's just not the type of reporting that your organization does, then we seek other means. So like a profit and loss and balance sheet. It does have to be either reviewed or created by someone who has a CPA background. And the reason for that is we want to make sure that the information that is being captured on this documentation is accurate, and that the person does have background into how to properly and label these and how to properly put them on the documentation. Other things that we ask for when we're looking at doing collateral in different types of loans, depending on the type of transaction that it is, we might ask for 40% down if you're purchasing a real estate. And for other nonprofits, it might be 20. It just depends on the structure of the nonprofit itself, because there's different risk categories. The way that we look at, like maybe a congregation versus, a nonprofit that offers services to the community. It's different type of donations that come in, and that kind of labels the type of risk that might come with that type of industry. Other things like that customers that are in nonprofits come to us for is sometimes they're looking for a line of credit. And same thing, what we ask for and what we request for collateral will depend on the type of industry that it is and that risk that's associated. If you can move on to the next slide for me, please. So types of collaterals that we ask for, again, depending on the structure and what the loan is. You might come to us because you need equipment or you need to do enhancements to, let's say you already own the property and you want to, there's upgrades or there's things that need to be fixed. Other times you're leasing and you're looking to actually buy a property. So it's a little bit different of what we would ask for collateral. And then, sometimes you're asking for just something to help with the gap in cash flow, to be able to pay your employees, to be able to, purchase small items that you might need for the organization itself. So types of collaterals that we will require. A lot of times when it is real estate, so if we're doing an actual commercial purchase, we will use that real estate itself as collateral. Now, when we're looking at other loans where it might be equipment and other things, and you don't own the property, but you're actually leasing it, we will look at, if there's investments or anything else that we can use to back that loan that we're extending out to you. Or we might do something where we call a simple secured product. That's where we put, it's like a blanket lien on the organization itself, to cover, that risk for the bank to be comfortable to extend that loan. And the things that we would use for that collateral, the blanket liens would be like accounts receivable, inventory, any equipment that the organizations have. So that's what we would put that blanket lien on. Next page, please. Now I'm going to talk a little bit about the different types of products and services that we offer at the banking institutions. So we do, when it's a commercial purchase, that would definitely fall under a term loan. The difference between a term loan and like a line of credit or unsecured product like the credit card is, term loans have a fixed rate, fixed term, meaning that if you continue to make your monthly payments, that at certain day, depending on what that term is, that it will be amortized, that at the final payment, the loan is done. Versus a line of credit or unsecured credit card, you use as you need. If you have a small, like let's say, I don't know, let me throw a number out there. Let's say you have a $10,000 need. You borrowed, you're able to pay back that principal. It becomes available again to you, and you continue to use as the organization continues to need the funds. I'm going to talk now about what it is that the banks look for when we're looking at your financial documentation that you provide to us, depending on what that is, whether it's the 990s, the profit and loss I mentioned, or the audited financials. We look to have that 1-to-1 debt service coverage. What that means is that for every dollar that is being brought into the organization, we want to see, for every dollar that is being spent, we want to see that $1.10 is being brought into the organization. When we look at doing lines of credit for a nonprofit, we can do up to 10% of whatever that annual donation gross amount is, as long as that 1-to-1 debt service coverage covers that. And the reason that we look at doing it that way for nonprofits is because how nonprofits differ from businesses for profit. There is no guarantor, so it's that it's board members, and board members change all the time. So it's actually the organization itself that's guaranteeing the loan or line that we're extending out to the organization. Versus when we're doing a for-profit business, it's the actual owner and ownerships that is guaranteeing making the payments back. Some of the other things that we offer at BMO, when we look at business credit cards, we offer cashback rewards, no annual fee. We also offer a 0% introductory. With our business credit cards, you can have also up to 20 individual cards. And you can designate different limits to different employees. And then we also offer our nonprofit deposit account that has low to no fees. And by that, I mean no monthly service charges. We offer cash management services, which is, it provides you with additional options on how to manage the money that's coming in payment that you're making to vendors and members and other organizations, depending on what type of payments you're making. And we also provide mobile and online banking services. We try to make it as easy as possible, depending on the organization, of what's convenient for you to accept payments and continue to have access to your deposit relationship and or lending with the institution. I'd like to move it to the next slide, please. Now we'd like to open it for questions. And in this slide, we also have links which we will share with the Big Buzz team leaders and Melissa, and they will be able to get this information out to you. But we'd like to open it up for questions and answer any questions that you guys have today.
Thank you all for such great information. I wanted to just kind of highlight one thing that I heard you talk about that I think is really, really fabulous. And that was the concept around not requiring like looking at the organizational funding and not necessarily like a guarantor from the board. I know we're working with a client right now, and their financial institution really will only look at their credit line based on an individual guarantor. And that's very challenging because a board member, as you noted, comes and goes. And so I really like the way that you're talking about the, looking at a nonprofit or an association as the entity it is, and knowing that it really does need to be evaluated on its own merits. So I loved hearing that. We have a couple of questions and in the chat. What are some impactful or atypical funding sources beyond the typical grants, donations, or earned revenue? And I know I made some notes myself, and I know Letty had kind of listed off some different options because it is customized for, I think every organization. But I've got my own notes here to kind of chime in, but I would go back and just Letty, if you could revisit that, I think.
Yeah, so a few things that I wrote down and I added, which may not draw the biggest. The first one, fees for goods and services. So sometimes nonprofits create, and I've seen some nonprofits create a product line. There's one that I worked with was called Bee Love, and they're a nonprofit and they work with extracting honey from the beehives, but they put these individuals to work around the different organizations, like O'Hara has huge, and they take that. So they employ these individuals, but their product and service has become huge. And they started that as a nonprofit, right? So now they sell, and I said Bee Love only because I'm talking to Big Buzz. So I kind of thought that was kind of cool. But I worked with that nonprofit for some years, and they have, it's a organization that really helps returning citizens. So individuals that have challenges, they help bring them and employ them back to work with some really nice paying jobs. And then part of one of the work they're doing, they created a product line from that, right? So selling goods and services. And again, that's just getting creative with your plan. Individual donations and major gifts, right? We know that's definitely something that we always want. I mentioned, of course, some of the basics, the corporate contributions, foundation grants, government grants and contracts, right? Those are the ones where I know some work got to get in and be done, but it can happen, right? Nonprofits, every government has a mandate to make sure that they're, working with a diverse vendor and suppliers, right? So what is your nonprofit mission? How is there an opportunity for you to obtain government grants and contracts? Interest from investment. So depending on your organization, depending on your nonprofit, have you thought about how you can do some investments that can generate some interest, right? Loan programs related to investments, tax revenue, membership dues and fees, right? So do you have a membership due and fee? And then there was something that I didn't get a chance to really dig deep into myself, but it was bequests, which I don't have enough on that, but I definitely wanted to kind of just mention that is another, as I was doing my research, that came up as part of some typical funding.
Yeah, a couple of things that...
Can I add real quickly, as the organizations are looking for like maybe corporate support through grants, it's always a good idea to try to negotiate multi-year so that you're not trying to negotiate it every year. You kind of know, maybe you can get a 2-year. If you get a 5-year commitment, that's even better. But it's very hard if you only have a 1-year commitment and you really depend on those funds for a program and you're not sure year to year whether you're going to get those funds. So I would say when you're seeking corporate support or foundational support, that, if you can negotiate multi-year grant funding, that is to your advantage in helping you to manage your cash flow.
I wholeheartedly agree. It just allows you to know what to expect. And to lock that in, right? It makes you a more bankable source too, when you know you've got that guaranteed additional revenue coming in, which is always nice. A couple of things I would add. I know on the corporate side, what I always find interesting too, right? There are a lot of corporations out there that do the grant giving, but then you add on the flip side as well that there's sponsorships. And so you can often go through kind of different departments within a company and get some funding there. So I would not overlook sponsorships. Also just fundraising, event revenue often is part of that ongoing kind of, revenue sources. And I think, Letty, you're absolutely right. I'm seeing more and more on memorials and bequests. I know there's one organization we have worked with for years, and they are now, gosh, I think they're probably in their 85th year. And so they have a lot of alumni that have come through the program. And so a lot of the, it's one thing when people, I see it more and more, right? Less flowers, less plants at memorials and wakes and those types of things, and a lot more charitable giving. And so when an active volunteer is devoted to something, those memorials come through. But then on those bequests, I mean, that organization that I was referencing, because of their alumni growing up through this program, it really touches them deeply. And they've had great success in having a lot of the alumni, factor into their will and their estate, that there is a portion of that will go to the organization. And so those are much larger gifts and not to be overlooked, because I think there's multiple layers in all of that.
Yeah.
So the other question too, I have been part of organizations that do a full audit every year. Is this typical or recommended? And I would like to know the financial perspective, but I do know in the state of Illinois that when gross contributions exceed $300,000, or if the organization has a paid professional fundraiser that they've and the contributions are in excess of $25,000 from that they do need to do audited financials. I know for a lot of organizations, it's in their bylaws. And it kind of was like done a certain way. And so, I think more organizations these days are starting to really question the expenses around it. And, when is it needed? And are there other options? But I'd love to hear you weigh in on that question.
Denisse, you want to take that?
Yep. From my previous role, again, it just really depends on what was required by the membership and the size of the organization itself. And what I mean by that, I'll give examples. I've done quite a bit of lending for churches and congregations, and I've seen it all. I've seen it from, because they're a large organization, meaning that it was, you're talking about 2,000 plus members on a congregation, that they had to have the audited financial, because it was a requirement because of the amount that they had in giving, as well as the archdiocese request. And then I've also worked with smaller organizations and churches that, it's just a pastor and a few board members, and even the treasurer is just a volunteer. And for those persons, they, sometimes they didn't even use a CPA. They weren't filing 990s because the organization is small and they didn't have to do that. So the profit and loss reviewed by a CPA worked for us and for me to be able to get them, a commercial purchase. I actually, in my previous role, because I just switched over about 2 months ago to this new role, I assisted a congregation with purchasing a $700,000 building, and all they had was the profit and loss and a letter from the CPA saying that it was reviewed by them. So again, it just really depends on the size of the organization itself and the requirements based on the donations that they're receiving and the size.
Yeah, I think that's a really hard question to kind of answer overall, because I mean, there's state variability depending on where an organization is based. There can be also, if you are a chapter or a part of a larger organization, like you mentioned, the Archdiocese. And so then there's an additional layer of expectations or obligations that often play in. So you really do have to do your homework, I think, around that particular issue to really determine what's right for your organization. We also have a question. Do you have any advice about prepaying expenses to keep expenses more consistent from month to month for an organization?
Yeah, I read that. I was thinking, I say depending on your budget, right? So if you can add consistency is always key, right? To keep it consistent. And then that way, what is being spent each month, and also based on what you have, maybe what your future projects may be, right? So if you can free up some cash flow for a particular month because you've already prepaid, and sometimes prepaying certain expenses, you can get in on discounts, right? So that also could afford you some, depending on certain vendors or whatever. If you prepay it, if you pay this ahead of time, you're saving X, right? So if there's a savings component to it, yes, but definitely bringing consistency around your expenses. And really, when you think of that, that's creating that budget, right? Creating that budget of, okay, this is what we have coming in. Can we afford to prepay it, right? And prepaying it, what benefit is it going to really bring us in the future state?
I think that's such a great advice. I know that when I look at some of the things, think programs like Constant Contact that I just know a lot of organizations use, there is a discount. If you can pay for the annual fee and pay it all at once, then your organization gets a reduced fee. But for some organizations, the monthly budget and being able to spread that out is actually more valuable to manage on that cash flow. And I think it's interesting, I love talking about cash flow because my first stint as an executive director, I really got thrown into it with very little training, and I really barely knew what a profit and loss was, certainly was learning about the balance sheet, but the concept of cash flow really was not something that very many people talk to. And I think that, most organizations that we manage, that we see, that we work with, there are ebbs and flows throughout the course of the year. So when you really do look at that, right, it's not just the budget and kind of like what's the total that you're going to be expecting for the year in revenue and expenses, but how does it break down month over month? And that's where that cash flow becomes so valuable, because you may have peaks and valleys. If your big event is where most of your funding comes from, then you know that maybe around the time of that big event is when most of your revenue comes in. If you've got huge annual campaigns, maybe that's going to play into some of these decisions. Or if you've got grant funding sources and they pay out at certain times, or if you're vouchering and that stays consistent, that can be very helpful. But really, when you look at it, breaking it down month over month and understanding your cycle, I think it does help you, to Letty's point, just understand if you are in a position to pay that money out, or do you need to hold on to it and just in case. And I know, here in the Chicagoland area, 2022 was really rough on a lot of the organizations and communities have SSAs, and those are based on property taxes. And when the property taxes got delayed, a lot of those organizations had huge delays. And so then they needed to have a line of credit. They needed to have some funding to fill in those gaps on the cash flow for sure, and still keep their services and programs up at the right level. So I think all of this information is so incredibly important and useful, and it just helps us be able to understand better how to tap into this to run our organization more efficiently.
And Melissa, when we think about 62% of nonprofits do not seek advice, that's over half. And so when the ebbs and flows happen, it's more reactive versus being proactive in understanding how to pivot in those ebbs and flows. The other thing that we didn't talk about is just having a great banking relationship. Even though the statistics said, I think it was 4% seek out their banker for advice, that's fine, but you should have a good working relationship with your banker. Denisse talked about churches, and churches are different. They get all lumped into one, but how they manage and bring in their donations could be very, very different. So having a good banking relationship with your banker so that you can explain how your inflows are occurring, your outflows, so that they can, or we can, really make a case for your line of credit to support that need, because now we understand how your business is operating. And
I think
finally, go ahead.
I think that's really important. I think too often people get really intimidated around finances. They think, oh, like I don't know enough. I shouldn't talk to an expert. I'm going to look like I don't know what I'm talking about. And I think that, we have to stop that stigma. I think a lot of us grew up that you don't talk about money. And so that transfers over into our organizations. And we do have to talk about money. We have to talk to these trusted resources and partners. Those stats you showed at the beginning kind of broke my heart, because really, most bankers are active. They're in the communities. They're there. You're seeing so many businesses and have so much breadth to draw from. And, I know that you just exist to be a resource. And so, I think back to my early banking days, right? I didn't understand the difference from the tellers to the people you'd go sit down with and talk to. And it really, you got to walk through and you got to ask the questions, because the amount of resources within the banking institutions are deep and far reaching, and you have products and services, and not all banks are the same. And I mean, there's just so many factors there. Like I said, I loved hearing you guys talk about how you look at the organization as an organization and not more where the board members are held liable for the funding, because it's just not realistic for an organization to sustain itself. So really great information, Vachon, that I just wanted to emphasize.
Well, Melissa, one thing that we always like to emphasize as well, nonprofits are a business, just like other businesses. And we tell our business owners, you have to have three best friends: a banker, an accountant, and an attorney, right? And, to the point, like when you're saying, like asking these questions of your bank, interview us the same way that, we're in, like ask us questions, right? Like come in and look. And it's so important what Vachon said, like having that relationship with a banker. I tell my businesses all the time, if you can't pick up the phone and say, hey, Letty, and not just me, right, but just a banker, then you don't have that relationship yet, and you need that. So that's really what we are, a relationship-based bank, and that's what we really pride ourselves on and emphasize.
Well, and that makes a difference too, right? Because even when you do those applications, I mean, you may be like borderline, like yes, no. And if you've got that relationship and your banker knows your story and they know that you've grown over the through the pandemic and moving beyond the pandemic, and you've started expanding new people and you're just waiting on a grant to come through, like if they know your story, they can also advocate for you. And I don't think enough people look at their bankers as advocates. And I know that this is true from all of our experiences.
I 100% agree with what you just said. A lot of times I had to be the person who was advocating, or an underwriter would reach out to me and, because there was something in the financials that just didn't make sense. And I had to explain what that one-off was, or what the funds were used for, and explain how that's not something that's going to be used again, to the underwriter. And it's so much easier to have that conversation when I, as a banker, understood what it was that the organization was trying to achieve, what the goals were, not just with the loan I was trying to do at that moment, but 2 years down the road, or 3 years, whatever that was, and how they got to where they did at that moment. So it's really, really important that you do have that type of partnership with your banker, and that they understand your whole mission, what your goals are, and how did you guys get to where you are today.
Right. We have a question in the chat. Is there a formula a nonprofit should use to determine what an appropriate level of financial reserves would be?
Well, I know there's an 80-20 rule for nonprofits. Oh, I'm sorry. Go ahead, Vachon.
No, I said it was a great question.
So I was Upon my research, just fun facts, right? We were doing, it says a nonprofit spends 65% of its income on program expenses, with the remaining 35% going towards their overhead expenses. So this is called the 80-20 rule for nonprofits. So I also had seen a chart. Now we didn't include the chart in ours, and maybe we could share it because I did look and find a little bit of a chart that kind of says what percentages should be spent in what allotments. So maybe we can send that. I could try to find it and send it.
And I would say if you have a relationship with your accountant, to really sit through a cash flow analysis and do a month by month, and that's just what you anticipate in your inflows and your outflows. And if you have that set up on a 12-month schedule, you can see where you kind of will have an idea when you need to borrow. So knowing that a certain fund takes 45 days to receive, you may need to borrow at that point in time to cover your expenses until those funds come in. So a cash flow analysis really is a good tool to have to let you determine how much do you think you're going to need at a certain point in time. Denisse did indicate that there's a certain percentage that we will lend against on the giving side or revenue side. What was that, Denisse? It was
10%.
10%. So just take 10% of your revenue and know that we could lend up to that amount.
Well, and I would add, I think that I look back at my first stint as an executive director, and I had a board member who thought, much to your point, Vachon, of it is a business. You are purely running a business. It's just the classification is different. And I've always felt that way. But I had one board member who felt that because we were a nonprofit, we should not have anything really left at the end of a year. We should not have reserves. We should be putting everything back out into the community we were serving. And even then, I knew that that was kind of nuts. I just didn't have enough experience to really argue the point. But then came I've seen now 2 recessions and a pandemic, and and they show you've got to have something put aside for a rainy day. And I think that when you start, it's good looking at that cash flow. You start to know what we call the monthly nut around here. What is the average monthly nut that you need to cover to keep your organization sustainable? And you want to start, can I get 1 month put away? And then if you've got 1 month put away, you work up to 2 months put away. And I think a best practice is to really try to have 6 months to a year of reserves. And if you start doing that and growing those reserves, then as these bankers have talked about, you get to start making investments, and then you start to get to having your money work for you. And so then your money, that money becomes a revenue source in and of itself. So I think it's a crawl before you walk before you run type of thing. And you want to have some. And so if you don't have any, you got to start there. And depending on where you're at, then to keep being able to grow that and expand that. And that's, again, where having a good banking team, a good, CPA, and a good board leadership and yourself to really be able to make a plan for what's right for your organization comes into play. But I always advocate for those reserves, and definitely starting wherever you're at and growing that is a beautiful thing. And we saw many organizations through the pandemic, it depended on if they had that or not, whether or not they were able to sustain or not. So great question.
We definitely don't want to shortstop technology, right? And what's out there and what's available to help nonprofits collect donations quicker, stay in front of folks. I mean, I think it was in November, December of every year is always kind of interesting to me, because I do get to see the different level of technology that nonprofits have to seek out donations before the end of the year. And so picking up the phone is, kind of gone out the window. Using mobile phones, text messages, things like that. it's just great. And your website, having a website that's easy to navigate. You know,
Yes.
the worst thing that can happen is for me to go on your website to give, and it's not easy because I have only a short period of time to make that donation and move on to something else. So the ease of the technology that's provided to collect those donations is very, very important. So technology, technology, technology.
Yep.
I love that technology, and I feel bad because I'm watching a lot of organizations continuing to have to manage their older donor population too. And so they're moving into technology for different segments of their population and still trying to manage the elderly in the way that they're comfortable with and being able to reach them. And so right now I feel like a lot of organizations are doing double duty, trying to manage all of the different pools and buckets, but they're all important. So
Absolutely.
yeah. Well, I'm not seeing any other questions coming in. So I would like to again, Vachon, Denisse, and Letty, thank you so much for being with us today. I think this is a topic that nonprofits and associations are not talking about enough. I think that we do not get enough of this information available on a regular basis. So we were really excited to be able to bring this to our audience. And I thank you for this presentation. And we will follow up, as I mentioned, with a recording and with these additional resources. And if you do have any additional questions, please let us know. We're happy to put you in touch with these fine ladies. Happy to be able to really make sure you are continuing to get the information you need to help your organization succeed. Thank you and have a great day.
Thank
Thank
you.
you.
Thank you all.